On December 1st, 2025, MicroStrategy, now rebranded as Strategy, announced the establishment of a $1.44 billion US dollar cash reserve, the world's biggest Bitcoin maximalist. The man who said the dollar is melting ice. The company that built its entire identity on never selling Bitcoin just created a massive fiat currency war chest. Think about that for a second. Michael Saylor spent years telling you Bitcoin is the only safe asset, that holding dollars is economic suicide, that Bitcoin will hit $500,000, $1 million, $13 million per coin. And now, he's hoarding $1.44 billion in the very currency he told you to abandon. Strategy's stock crashed 37% in 2025. Some estimates put the peak-to-trough decline at 53%. On December 1st, the company's market cap briefly fell below the value of its Bitcoin holdings, trading at $45 billion while holding $55.2 billion in Bitcoin. That's a negative premium. Wall Street was valuing the company at less than its assets. So what emergency triggered this panic move? And is Michael Saylor quietly abandoning ship while telling retail investors to keep buying? Today, we're going to connect the dots. By the end of this video, you will understand why. Strategy's $1.44 billion reserve isn't financial prudence. It's proof that even the world's biggest Bitcoin maximalist doesn't believe his own thesis when the price crashes. Let's start with what Strategy actually announced. On December 1st, Strategy disclosed that it raised $1.44 billion by selling 8.214 million shares of its class, a common stock under its at-the-market offering program. They didn't sell Bitcoin, they diluted shareholders instead. But here's the key, they recalling this a USD reserve, designed to fund at least 12 months of preferred stock dividends and debt interest payments, with a goal of covering 24 months. CEO Feng Lei said, the reserve is intended to alleviate investor concerns regarding the company's capacity to endure a significant decline in Bitcoin prices. Read that sentence again. Strategy just admitted they're preparing for Bitcoin to keep falling. But here's the glitch that doesn't add up. If you truly believed Bitcoin was going to $500,000, why would you hold $1.44 billion in cash earning zero return when you could buy more Bitcoin at $89,000? Because even Saylor doesn't believe his own predictions anymore. So let's talk about what the data reveals about Strategy's desperation. In November 2024, Strategy bought 134,000 Bitcoin. In November 2025, they bought 9,100 Bitcoin. That's a 93% reduction. And in December 2025 so far, they bought just 135 Bitcoin. 135 Bitcoin. The world's most aggressive Bitcoin accumulator has essentially stopped buying. But it gets worse. Strategy's market cap fell to $45 billion while holding 650,000 Bitcoin worth $55.2 billion. After accounting for $8.2 billion in liabilities and adding the $1.4 billion cash reserve, the company has $48.4 billion in net Bitcoin assets. So the market is valuing Strategy at $45 billion, but their net Bitcoin alone is worth $48.4 billion. That's a $3.4 billion discount. Wall Street is saying, we don't trust this company, we don't trust this strategy. And we think the Bitcoin they're holding is less valuable than the market price suggests. Think of it like this. If you owned a house worth $100,000 but the market would only pay you $95,000 for the entire company that owns the house, that means investors think you're going to default on the mortgage, be forced to sell the house at a loss, or the house is about to collapse. That's what Wall Street is pricing in right now. Strategy is trading at a discount because investors believe they will be forced to sell Bitcoin to meet debt obligations when the price falls further. And Strategy knows this. That's why they created the $1.4 billion reserve. But here's where it gets sinister. Because Strategy didn't create this reserve by selling Bitcoin. They created it by diluting shareholders, issuing 8.214 million new shares and pocketing $1.478 billion. Existing shareholders got crushed. More shares outstanding means each share is worth less. So retail investors who bought MSTR stock, thinking they were getting leveraged Bitcoin exposure, just got diluted to fund a fiat cash reserve that earns zero return. Let me walk you through the mechanism that proves this is a panic move. Strategy's entire business model is built on the Bitcoin yield strategy. They issue stock or debt, use the proceeds to buy Bitcoin, And as Bitcoin appreciates, the value per share increases even faster than Bitcoin itself due to leverage. It's a perpetual motion machine as long as Bitcoin keeps going up. But what happens when Bitcoin stops going up? Or worse, when it crashes from $126,000 to $89,000, a 29% decline? The machine breaks. Debt payments still come due. Preferred dividends still need to be paid. But the collateral Bitcoin is worth less. And if Bitcoin falls far enough, the company becomes insolvent. That's the nightmare scenario. And Strategy just admitted they're preparing for it by building a $1.4 billion fiat war chest. But here's the timeline that should terrify every Bitcoin maximalist. On October 30th, Strategy issued forward guidance assuming Bitcoin would average $150,000 in Q4 2025. They projected their Bitcoin holdings would generate enough yield to justify their stock valuation. On December 1st, just 32 days later, they revised that guidance. They admitted their assumptions were wrong. Bitcoin didn't hit $150,000. It's trading at $89,000. And suddenly, their entire financial model is underwater. So they panicked. They sold 8.2 million shares. They raised $1.44 billion in cash. And they stopped buying Bitcoin. That's not a strategic adjustment. That's a crisis response. And here's the chart I'm about to show you that changes everything. Because Strategy's premium to net asset value has collapsed. Earlier in 2025, MSTR stock traded at a 50% premium to its Bitcoin holdings. Investors were willing to pay $1.50 for every $1 of Bitcoin the company owned because they believed in Saylor's vision. But on December 1st, that premium compressed to just 1.16 times NAV. Investors are now only willing to pay $1.16 for every $1 of Bitcoin Strategy holds. And during the worst moments of the sell-off, the premium went negative. The stock traded below the value of its Bitcoin. That's a vote of no confidence. Wall Street is saying, we don't believe Strategy can execute. We think they'll be forced to liquidate. And we're pricing in the risk that Bitcoin falls below their average purchase price. So let's zoom out and show you the big picture. Michael Saylor built his entire brand on Bitcoin maximalism. He called the dollar melting ice. He said Bitcoin is the apex property of the human race. He told retail investors to mortgage their houses and buy Bitcoin because it's going to $13 million per coin. But when HIS company faced financial stress when HIS debt obligations came due and Bitcoin crashed 29%, what did he do? He created a $1.44 billion USD reserve. He stopped buying Bitcoin. He diluted shareholders. And he admitted the company needs 12 to 24 months of fiat cash to survive a prolonged Bitcoin downturn. That's not maximalism. That's betrayal. Because if Saylor truly believed Bitcoin was going to $500,000, he wouldn't need a cash reserve. He'd just borrow more, buy more Bitcoin, and ride the wave up. But he's not doing that. He's building a fiat war chest because he knows Bitcoin could fall to $70,000, $60,000, or even $50,000, and if it does, Strategy becomes insolvent. So let me ask you this, are you watching Saylor's actions or are you listening to his words? Because the data tells a brutal story. Strategy slashed Bitcoin purchases by 93%. They created a $1.44 billion cash reserve. Their stock trades below the value of their Bitcoin. And Wall Street is pricing in a $3.4 billion discount because they believe the company is heading toward forced liquidation. Saylor told you to buy Bitcoin at $100,000. But when it fell to $89,000, he stopped buying and started hoarding cash. That's not leadership. That's self-preservation. And here's the question nobody on Bitcoin Magazine wants to answer. If the world's biggest Bitcoin bull doesn't trust his own thesis enough to keep buying during a 29% dip, why should you? Strategy's $1.4 billion reserve isn't a sign of strength. It's a panic button. And the fact that they had to press it just 32 days after issuing optimistic guidance tells you everything you need to know about how fragile this entire model is. Michael Saylor didn't betray Bitcoin because he stopped believing in the technology. He betrayed Bitcoin because he realized the price might not save him when his debt comes due. So here's the real question. Do you trust Saylor's words about Bitcoin going to $1 million, or do you trust his actions of hoarding $1.44 billion in the very fiat currency he told you was worthless?